Hey everyone, welcome back to Retirement Clarity. I'm Lenny, and if this is your first time here, I want you to know that this channel exists for one reason and one reason only, to give you honest, straight-talking, no-nonsense financial information that actually matters to people like us who are 60 and older and thinking seriously about protecting everything we have worked our entire lives to build. And today, I have to tell you, I am genuinely excited about this video because what I'm about to share with you is something I get asked about constantly. And today, on May 7th, 2026, I am finally ready to tell you exactly what I personally am doing with a portion of my retirement money and why. Today, we are talking about the top 5 retirement investment secrets for 2026. And yes, one of them is XRP. And I'm going to tell you straight up that I am buying it today. Now, before you click away thinking this is just another crypto hype video, I want you to stay with me because what I'm going to share with you today is not hype. It is research. It is facts. It is the kind of information that your financial advisor might not be volunteering to you. So get comfortable, grab your coffee, and let's get into it together. But first, and I always say this on Retirement Clarity because I mean it every single time, nothing I share in this video is personal financial advice. I am not a licensed financial advisor. I am a guy who cares deeply about retirement, who researches obsessively, and who shares what he finds with this community. Your situation is unique. Your savings, your health, your family, your timeline, all of that is personal. So please, after this video, take what you learn here and have a real conversation with a qualified financial advisor before making any moves. I say this not because I have to. I say it because I genuinely care about your security. Okay, now let's talk about these 5 secrets. The very first secret, and this one might surprise you because it sounds almost too simple, is that the biggest mistake most seniors make with their retirement money is being too safe. Now, I know what you're thinking. Lenny, isn't being safe the whole point at our age? And I understand that instinct completely. When you are 65 or 70 years old, the last thing you want is to lose what you have. But here is the reality that most people don't talk about openly. Inflation is eating your savings alive if all you have is sitting in a traditional savings account or in bonds that are barely keeping up with the cost of living. As of right now, in May 2026, inflation has continued to erode the purchasing power of fixed income. What cost you $1 5 years ago costs you significantly more today. And if your retirement savings are not growing at a rate that at least matches inflation, you are losing money, slowly, quietly, invisibly, but losing it nonetheless. The secret is not to take reckless risks. The secret is to understand that doing nothing with your money is itself a risk. Smart seniors in 2026 are not choosing between safe and risky. They are building layered portfolios where the foundation is secure and protected, and then they have smaller, calculated positions in higher growth assets that have the potential to outpace inflation meaningfully. That is the mindset shift. That is secret number 1. The second secret is one that Wall Street does not want to talk about loudly, and that is the quiet death of the traditional 60-40 portfolio for seniors. For decades, and I mean literally for generations, the standard advice for retirees was this: put 60% of your money in stocks and 40% in bonds. That formula was supposed to give you growth with protection. And for a long time, it worked reasonably well. But in today's environment, with interest rates where they are, with bond yields struggling to deliver real returns after inflation, with the stock market being increasingly driven by a small number of mega-cap technology companies, the 60-40 portfolio is simply not doing what it used to do. Serious financial analysts and retirement specialists are now talking about what they call the new retirement portfolio, which still has a strong core in diversified stocks and some bonds, but which also includes what they call alternative assets, things like real estate investment trusts, commodities, and, yes, carefully selected digital assets. The secret is that the rules of retirement investing have changed, and the seniors who are thriving financially in 2026 are the ones who updated their playbook instead of clinging to strategies that were designed for a different era. If your advisor has not talked to you about this shift, it is worth bringing up. The third secret, and this one is very practical and very actionable, is about where your money sits, not just what it's invested in. Most seniors have the majority of their retirement savings in tax-deferred accounts like traditional IRAs and 401k plans, and that is generally smart. But what many people don't realize is that the sequence of how you withdraw money from different types of accounts in retirement can have an enormous impact on how long your money lasts and how much of it you actually keep after taxes. This is called withdrawal sequence strategy, and it is one of the most overlooked areas of retirement planning. The basic idea is that you want to be thoughtful about which accounts you draw from first: your taxable accounts, your tax-deferred accounts, or your tax-free Roth accounts, depending on your current tax bracket and what you expect your tax situation to look like in the future. Getting this right can add years to the life of your portfolio. Getting it wrong can cost you tens of thousands of dollars in unnecessary taxes over the course of your retirement. I cannot tell you the exact right sequence for your situation because it depends on factors that are specific to you. But I can tell you that this conversation, the withdrawal sequencing conversation, is one you absolutely need to have with a CPA or a retirement planning specialist if you have not already. This is secret number 3, and it costs you nothing to ask about it but could be worth an enormous amount to your retirement. The 4th secret is something that I have been watching very carefully for the past 18 months, and it is genuinely exciting if you understand what is happening. The secret is this: we are in the very early stages of traditional retirement infrastructure opening up to digital assets in a way that has never happened before in history. Let me explain what I mean by that. Up until very recently, and we are talking about just the past year or so, if you wanted exposure to cryptocurrency in your retirement accounts, your options were extremely limited and extremely complicated. Most 401k plans did not allow it. Most financial institutions did not support it in a meaningful way. It was the Wild West. But that is changing rapidly and dramatically right now in 2026. The Department of Labor proposed a rule in March of 2026 that would open the door for 401k plans to include crypto assets for the first time. We are talking about $10.1 trillion in retirement savings potentially getting legitimate access to digital assets. Spot XRP ETFs, which are investment vehicles you can buy right inside your regular brokerage account, no crypto wallet required, no complicated technology, are already trading, and they have attracted over $1 billion in assets since launching. The state of Indiana has already passed legislation requiring state retirement plans to offer a crypto investment option by 2027. Other states are watching and following. This is not fringe activity anymore. This is the mainstream retirement establishment slowly but unmistakably moving toward digital assets. And the seniors who understand this trend early, before it becomes the standard conversation, are the ones who will be positioned to benefit from it most. That is secret number 4. And now, secret number 5. And this is the one I know you have been waiting for. This is the one that I personally acted on today, May 7th, 2026. Secret number 5 is XRP. And let me be very clear about what I mean when I say this, because I want to make sure you understand my position precisely. I am not saying XRP is a guaranteed investment. I am not saying it is risk-free. I am not saying every senior should buy it. What I am saying is that for the right person in the right financial situation, a small, calculated, informed position in XRP right now represents one of the most interesting asymmetric opportunities available to seniors in 2026. Let me explain why I believe that, and let me explain what I mean by asymmetric. XRP is the digital currency created by Ripple, a company that built a payment network designed to move money across borders instantly and at almost no cost. While banks currently take days and charge significant fees to send money internationally, Ripple's network does it in seconds for fractions of a penny. And major financial institutions around the world, actual banks, actual payment processors, are already using this network. That gives XRP something most cryptocurrencies simply do not have: a real job in the real world. It is not just speculation. It has genuine utility. And right now, the regulatory environment around XRP in the United States is more favorable than it has ever been. The legal uncertainty that hung over XRP for years has largely cleared. The infrastructure for regulated retail access through spot ETFs is now in place. Institutional money is flowing in. These are all real, verifiable, current developments as of today, May 7th, 2026. Now, here is what asymmetric means in plain English. Asymmetric means that your potential upside and your potential downside are not equal in terms of what they mean for your life. If I take a small amount, let's say 2 or 3% of my retirement portfolio, and I put it into XRP through a regulated ETF, the worst case scenario is that I lose that 2 or 3%. That is painful, but it does not destroy my retirement. My home is safe, my medical bills are covered, my security is intact. But if XRP continues to develop as a genuine financial infrastructure asset, and there are real reasons to believe it might, that same 2 or 3% position could grow to be worth 4, 5, or 10 times what I put in, and even a small position growing that significantly would add meaningfully to my overall retirement wealth. That is asymmetric opportunity, small downside, meaningful upside. And at our age, in our financial situation, finding genuine asymmetric opportunity is genuinely rare. When it shows up, backed by real technology, real institutional interest, and real regulatory development, it deserves serious attention. Now, I have to be completely honest with you about the risks, because that is what retirement clarity is about. XRP is volatile. Its price goes up and down, sometimes dramatically. It dropped more than 60% from its peak in 2025. Earlier in its history, it dropped 96% from its high. Those are brutal numbers, and they are real. This is not a stable asset. This is not a bond. This is not a savings account. If you cannot emotionally handle watching an investment drop 30 or 40% in value, even a small one, then XRP is not right for you. And that is a completely valid conclusion. If the money you are considering putting into XRP is money you need for rent, medical care, groceries, or any essential living expense, then XRP is absolutely not for you, and please do not do it. The only money that belongs in XRP is money that you have genuinely set aside as discretionary, money that if it went to zero tomorrow, your life would not change in any material way. Please be honest with yourself about whether that money exists in your situation before making any move. But here is what I will say to those of you who do have some discretionary allocation, who are already diversified, who are already secure in your foundation, who are working with a financial advisor, and who have been watching the XRP story unfold over the past year with genuine curiosity. Today, May 7th, 2026, feels like a moment worth paying attention to. The regulatory doors are opening, the ETF infrastructure is in place, institutional money is moving, and the price, which ran very high in mid-2025, has pulled back significantly, meaning anyone entering now is doing so at a discount compared to where it was at its peak. I am not predicting the future. Nobody can do that. But I am telling you that I personally looked at all of these factors together and made the decision to add a small XRP position to my portfolio through a regulated ETF today. And I wanted to share that with you and tell you exactly why. Now, let me give you the practical checklist, because Lenny is always about giving you something you can actually use, not just information you listen to and forget. Number 1, before you do anything, sit down and write out your complete financial picture. What do you have, where is it, and how much of it could you genuinely afford to lose without affecting your daily life? That number, if it exists, is your absolute ceiling for any XRP consideration. Number 2, make sure your foundation is solid before you think about anything else. Diversified stocks, bonds, emergency cash reserves. If that foundation is not in place, XRP is not the next step. The foundation is. Number 3, only use regulated vehicles. XRP ETFs through a brokerage you already know and trust. Fidelity, Schwab, whichever platform you already use. Do not send money to unfamiliar crypto exchanges. Do not respond to anyone who contacts you about XRP investments online or by phone. Regulated ETF through your existing account. That is the only safe path. Number 4, keep the position small. Financial experts who discuss crypto for seniors consistently say 1 to 5% of total portfolio as an absolute maximum. And within your crypto allocation, XRP should be a smaller piece than Bitcoin if you have any. Number 5, have the conversation with your financial advisor. Bring this video to them if you want. Ask them about XRP ETFs. Ask them whether a small allocation makes sense for your specific situation. That conversation is free, and it is absolutely the right next step before doing anything. I want to close today with something that goes beyond the numbers, because retirement clarity has always been about more than just investment tips. It is about the bigger picture of how we live and thrive in the second half of our lives. We are in a moment of genuine change in the financial world. The rules that governed investing for the past 50 years are being rewritten. New asset classes are entering the mainstream. New technology is reshaping how money moves around the world. And the seniors who thrive in this new environment will not be the ones who ignored all of it out of fear. They will be the ones who stayed curious, who stayed informed, who asked questions and had conversations and made deliberate, thoughtful decisions about how to protect and grow what they have built. That is who you are. That is why you are here watching Retirement Clarity. And that is exactly why I wanted to share today's decision with you openly and honestly, because you deserve to know what informed, thoughtful seniors are actually doing with their money right now in May 2026, not just what the standard advice says they should do. XRP may or may not be the right move for you specifically. But the conversation about digital assets and retirement, that conversation is happening whether we participate in it or not. And I would rather have it with you here, honestly and carefully, than leave you to find out about it from someone who is trying to sell you something. I am Lenny. Thank you so much for spending this time with me today. If today's video gave you even one new thing to think about, please hit that like button. It takes 1 second and it helps us reach more seniors who need this information. Subscribe to Retirement Clarity and hit that bell so you never miss a new video. Share this with someone you know who is thinking about their retirement future, a spouse, a sibling, a friend. And please drop your questions in the comments below. What do you want to know about retirement investing in 2026? What keeps you up at night about your financial future? Tell me, and I will do everything I can to bring you clarity. Take good care of yourselves, stay curious, stay informed, and I will see you in the very next one.